What is up, everyone? Welcome back to Investing Club. In this video, we're going to talk about electric vehicle stocks, the massive run they've been on in the past couple of weeks, and why, in my opinion, it is very clear that electric vehicle stocks are in a huge bubble right now. And then I'll show you some evidence on how I think this will end based on a similar event that happened not too long ago. So if you're watching this video, you've probably heard of a number of the electric vehicle stocks that have just been going straight up over the past couple of weeks. For a couple of examples, we have NKLA, which is up 372%. We have Workhorse up almost 600%. We have NIO up 387%. Shell, which is going to be merged with Hyliion, that's up over 150%. And then of course we have the biggest one, Tesla, which is up 743% in the past couple of years. So here's the thing, all of these stocks are massively overvalued based on whatever you want to use to value these companies, except for Tesla. I guess Tesla is valued on car deliveries. But anyway, all of these stocks are overvalued. And in my opinion, it is quite obvious that they're in a bubble. And I already know what kind of comments I'm going to get on this video. What are you talking about? Electric vehicles are going to change the world. Everyone's going to be driving electric soon. Tesla's not a car company. They're making batteries. They have solar power. This kid obviously doesn't know what he's talking about. But I guarantee you, if those people are buying into these types of stocks at these valuations, they haven't studied history, because what I'm about to show you is a very similar thing that happened with a very similar industry with the potential for changing the world and technology that we saw in a huge bubble, and then we actually saw it crash. And this didn't happen too long ago. We don't have to go back many years to find the bubble of 3D printing stocks. So not too long ago, back in 2014, 2015, we saw a very similar thing with the price of these 3D printing stocks compared to the price of the electric vehicle stocks we're seeing now. Here's an article, Bursting of the 3D Printing Stock Bubble. And I think these two industries are very similar in terms of the thought process that is behind these investors investing in them. They think this is going to be the future, this is going to change the world, they're going to make everyone rich. So just for some context, here's what happened with these companies. The first one was 3D Systems, and starting in 2012, they ran up over 700%. And then what happened? After that, they crashed down another 90%. We can see another company, Stratasys, which is also a 3D printing company. Starting in 2011, they ran up 400%, and then following that, they crashed over 80%. You also see VJet stock was in 2013 around $60, and right now they're under $2 a share. Then we have X1 stock, again, back in 2013, over $68 a share, and right now under $9 a share. So what happened to these companies? Why have they gone down so much, even though 3D printing as an industry is still on the rise? And the answer is pretty clear, it's irrational exuberance. This is what happens when investors get so excited and so worked up about a particular stock or industry, they push the price up way beyond what reasonable expectations should be for this company. And by the way, this isn't even the first time this happened either. We could go back to the dot-com bubble, and this is what this article says, where back in the dot-com bubble, instead of using traditional models for evaluating a company and their future earnings, they created their own models based on irrational growth projections. That sounds a lot like Tesla to me, where they have PE ratios of over 400, but everyone says you can't value Tesla like that. Look at what they're going to do with solar power. Look at what they're going to do with batteries. They're not a car company, they're a technology company. All of these things are trying to justify the valuation that Tesla's trading at, which you just can't, in my opinion. So what happened with these 3D bubble stocks? We saw some irrational exuberance in 2013 to 2014 when these stocks that I just showed you peaked or were close to their peaks. And comments such as 3D printing will change everything and everything will be 3D printed eventually were commonly heard. This reminds me a lot of right now electric vehicle stocks. Everyone right now is saying electric vehicles are the future. In 20 years, everyone's going to be driving an electric car. Everyone's going to have solar panels on the roof that power the electric cars, and there's going to be autonomous driving. No one's going to have to actually drive themselves anywhere, and all of this will make Tesla, NIO, all these electric vehicle companies a ton of money. Well, guess what? Everyone was saying the same thing about these 3D stocks too. There was so much hype about 3D printing. Houses are going to be made out of 3D. You can build a house from 3D printers. You can 3D print anything you want. You want clothes, you can 3D print it. You can even 3D print food. Just design what food you want and the printer will print it out for you. You don't even have to go out to get food anymore. You can just print it right from your own 3D printer. These are the type of things that people were saying, and this is exactly the irrational exuberance that drove up these 3D stock prices so much. So a lot of people are going to say, well, in the 2000 dot-com bubble, guess what? These companies weren't even doing anything. Most of them weren't even real companies. They just called themselves an internet company, and they became valued at billions of dollars without even bringing in much revenue. And the 3D printing bubble is a little bit different, where we saw these companies actually were profitable. Most of these 3D printing companies had several revenue generating models in place. But here's the thing, when investors began questioning how the companies they owned would actually produce positive cash flow, that's when the crash in these 3D printing stocks began. You see all this hype around 3D printing, all these huge expectations for these 3D printing stocks, and all these wild plans on how they're going to produce a profit with whatever new technology they come out with. And eventually, once everyone's on their system, then they'll start making money. But it only took a couple of years for people to realize, well, wait a second, all these expectations that we had for these companies, it's really unlikely that's going to happen. And that's the exact moment where you see bubbles end, with everyone that's involved in the mania takes a step back and realizes, hold on, this has gotten out of hand. That's when you're going to see a massive sell-off. And I think that's going to happen sometime soon for these electric vehicle stocks. And the thing is, 3D printing is still a growing industry that's growing very fast. Here's an article on Forbes from 2013 talking about projecting the growth of the 3D printing bubble. And this article is pretty spot on. They said that 3D printing would be a $10.8 billion industry by 2021. And right now it's 2020, and they were pretty close. The 3D printing industry is around $10 billion right now. And so it's articles like this that help drive up the price of these 3D printing stocks to a level that can't be justified. And they talk about the 3D companies back in 2013 that have seen excellent gains over the past 12 to 24 months. And they go through all of these 3D companies and talk about why they're so great and why they're going to be part of this massively growing industry. Well, guess what? The industry has been growing like they said it was, but these stock prices are lower or the same as they were back in 2013. And why is that? It's because these companies have been struggling to turn their technology into a profit. Where even though the 3D printing industry is growing and growing and growing, these stocks can't seem to translate that into profits. And at the end of the day, that's what people care about. That's why you buy into a company, for profits, not for how many cars they're going to deliver, not for how many solar panels they're going to install in people's houses. The only thing that matters is profit in the end. So now we come to this article, blame Robinhood traders for a dangerous electric vehicle stock bubble. And I think this is what's happening, where you have inexperienced investors dumping their money into EV stocks because they think it's the future, they see the price going up, and they think, I have to get in now. Look what happened to Tesla, that's going to happen to all of these other stocks. And it's pretty clear that these investors aren't very experienced, because if they were, they would see what I see, which is this is very similar to how 3D printing ended, which was not well. So of course, the case with Tesla is now bigger than Ford, GM, BMW, Daimler, and Volkswagen combined, yet Tesla doesn't even make as many vehicles as any one of those separately, and they don't make as much money as any one of those separately. And when you go to the most popular stocks on Robinhood list, guess what's on the top of the list? Number 1, NIO, number 2, Tesla. 2 electric vehicle stocks that's being promoted on Robinhood and that everyone's buying into because they see the price of these going up, they see the hype, they see that it's potential to change the way that people drive their cars. And so that's why everyone's piling into these stocks. You have stocks like Workhorse up 500% over the past 6 weeks, and the stock is up because they pass important safety checks. So yeah, that's obviously good news for the company. To me, doesn't seem to justify going up 500%. So like I said, right now, I think electric vehicle stocks are hyped up and their current prices are placing huge expectations on them that it's almost impossible for them to meet. For Tesla to be a good investment at $1,500, so much would have to go right. And it's even worse for all these other companies like NKLA, which hasn't even sold a vehicle yet, but it's being valued at billions of dollars. That doesn't make much sense. And I think at some point we're going to see this electric vehicle bubble come to an end, and we're going to see all of these stocks crash back down to whatever their true value is. I don't know exactly what it is, because these stocks are pretty hard to value when they're not making any money. So I think the stock of 3D Systems and the stock of Tesla actually look very similar during their huge run-up phase. So we saw 3D Systems from around 2011 to around 2013 go up 653%, more than that because I can't get the exact top, but around 650% over the period of 2 years. We can take a look at Tesla and we see something very similar. The stock price is up 800% in the period of 1 to 2 years. And so this is usually the period of time it takes for investors to realize that all the hype that's for these companies isn't justified. So I think after the run-up, what you see with 3D Systems stock, where you see the huge crash when investors realize this technology isn't going to make as much money as everyone thought it was, I think a very similar thing could happen to Tesla stock and to other electric vehicle stock, where we saw a huge period of sideways consolidation, then we saw the hype and we saw the stock just explode. And then all those expectations came back down to reality when people realized that the fundamentals don't justify that high of a price. And then we see the consolidation again. I think that's something very likely that we'll see with electric vehicle stocks and Tesla, at some point in time. Now, this isn't me calling the top. I can't predict when electric vehicle stocks are going to start going down. As always, these types of stock bubbles and manias can always go on for longer than you expect. So I'll also probably never short these stocks, but I will just be watching from the sidelines and watch these stocks go down, and unfortunately watch a lot of investors lose a lot of money when the insane expectations for these companies don't pan out. And so putting the chart of Tesla and 3D next to each other, they look extremely similar. And once those expectations die out for Tesla too, the stock is going to go back down to where they were consolidating at, which would result in a large loss for many investors that are buying in during this huge bubble mania phase. So like always, this is just my opinion. Of course, I could be wrong. Maybe electric vehicles are for real. Maybe it won't be too long before everyone's driving an EV car, and that these companies will profit a lot from it and it will make shareholders rich. Maybe I'm wrong. So if you do think I am, let me know why. Let me know down in the comments if you own any of these EV stocks like Tesla or NIO. Let me know why fundamentals don't matter with them, and if you're ever going to sell them at any price, or you're just planning on holding because you think they're the future. So let me know what you think, and let me know what you think between this comparison between electric vehicle stocks and 3D stocks. I think it's very similar. I think the potential of the technology for both industries is very similar. And so I think in some ways we will see a repeat of that bubble happen with these electric vehicle stocks. So with that, that's the end of this video. If you like the video, hit the like button, subscribe to the channel if you haven't already, and I'll see you on the next video.